Imagine waking up, checking your charts, and seeing gold explode 200 pips in just a few hours. But you missed the move because you didn't know the exact support and resistance levels institutions were watching. Today, that changes in this video. I'm going to walk you through the most important gold support and resistance levels you need to watch right now, how price is reacting around them, and what this could mean for the next big move. If you trade XAUUSD, or you're planning to, stay with me because the next few minutes could seriously improve your entries and exits. Before we dive in, make sure you like this video and subscribe to Forex Trading Rocket Signal so you never miss important daily gold levels and market breakdowns. We focus on clear, simple analysis that actually helps you trade smarter, not harder. Now let's get into it. Gold, also known as XAUUSD, is one of the most volatile and exciting markets in Forex. It reacts strongly to inflation data, interest rate expectations, geopolitical tensions, and overall risk sentiment. When fear increases in the market, investors often rush into gold as a safe haven. When the US dollar strengthens or bond yields rise, gold can face heavy selling pressure. That's why understanding key support and resistance levels is not optional, it's essential. Right now, gold is trading around critical technical zones. On the higher timeframes like the daily chart, we can clearly see that price has been respecting a major resistance area near the recent swing highs. This zone has acted as a ceiling multiple times, rejecting price with strong bearish candles. Every time gold tries to break above this region, sellers step in aggressively. That tells us institutions are defending this level. Below the current price, there is a strong support zone formed from previous consolidation and strong bullish reactions. When price dropped into this area before, buyers came in with volume and pushed the market back up. This tells us the big players see value in that zone. As long as gold stays above this support, the bullish structure on the higher time frame remains intact. Now, let's break it down in a more practical way. Skilled approaches resistance again. We need to watch the price behavior very closely. Does it form rejection wicks? Do we see bearish engulfing candles? Is volume increasing on the selling side? These are signs that resistance is holding. In that case, short-term traders may look for selling opportunities with proper risk management. But here's where it gets interesting. If gold finally breaks and closes strongly above that resistance on the 4-hour or daily chart, that changes the game. A clean breakout, followed by a retest of the broken resistance, turning into support, could open the door for a continuation rally. Breakouts in gold can be explosive, especially when they align with fundamental catalysts like inflation data or Federal Reserve statements. Speaking of fundamentals, keep an eye on updates from the Federal Reserve. Any shift in tone regarding interest rates can move gold very fast. Also watch economic releases like CPI and non-farm payrolls. If inflation comes in higher than expected, gold often reacts strongly because investors look for protection against rising prices. On the other hand, stronger than expected job data can boost the US dollar and pressure gold lower. Another important factor is the US dollar index, commonly known as DXY. Gold usually has an inverse relationship with the dollar. When the dollar strengthens, gold tends to fall. When the dollar weakens, gold often rises. So if you see gold approaching support while the dollar is hitting resistance, that confluence increases the probability of a bounce. Let's talk about market structure. On the 4-hour chart, we need to identify whether gold is forming higher highs and higher lows, which would confirm an uptrend, or lower highs and lower lows, signaling a downtrend. Right now, price action suggests that gold is in a corrective phase within a broader bullish trend. That means pullbacks into support could offer buying opportunities, but only if the structure remains intact. One common mistake traders make is entering trades in the middle of the range. When price is stuck between support and resistance, it often moves randomly and creates false signals. The smarter approach is patience. Wait for price to reach key zones. Let the market come to you. Professional traders don't chase price, they react at levels. Now imagine this scenario. Gold drops sharply into a strong daily support zone. Retail traders panic and start selling, but suddenly you see long lower wicks forming. Then a bullish engulfing candle appears. Volume increases. This is often a sign that smart money is accumulating positions. If confirmed, this could be the beginning of a strong reversal. Recognizing these patterns around support can give an edge. On the other side, if gold rallies into resistance and forms multiple rejection candles with decreasing bullish momentum, that can signal exhaustion. If a bearish engulfing candle closes below the previous low, that may indicate the start of a pullback. Again, confirmation is key. Never rely on one candle alone. Risk management is just as important as identifying levels. Even the strongest support can break. Even the clearest resistance can be smashed during high-impact news. Always use stop-loss orders. Protect your capital first. The goal is not to win every trade, it's to stay in the game long enough to catch the high-probability setups. Now, let's think bigger. On the weekly chart, gold has been respecting long-term trend lines and macro zones. If we zoom out, we can see that the current price is still within a broader bullish structure that started months ago. This tells us that deep pullbacks may still be buying opportunities unless a major weekly support is broken decisively. Psychology also plays a huge role here. When gold approaches all-time highs, emotions get intense. Fear of missing out pushes traders to buy late. At the same time, experienced traders begin to secure profits. This creates volatility and fake breakouts. That's why confirmation and patience matter so much. Another thing to watch is liquidity. Gold often sweeps liquidity above obvious highs or below obvious lows before reversing. For example, price may break slightly above resistance, trigger breakout buyers, and then sharply reverse down. This is called a liquidity grab, SP2. If you understand this behavior, you won't panic. Instead, you'll wait for structure to confirm direction. So what are the key levels to watch today? First, the nearest resistance zone around the recent swing high. A strong break and close above it could signal continuation to the next psychological level. Second, the immediate support formed by the latest higher low on the 4-hour chart. If this level holds, buyers remain in control. If it breaks with strong momentum, we may see a deeper correction toward the next daily support. Corways mark psychological round numbers as well. Gold reacts strongly around whole numbers because many pending orders are placed there. These levels can act as magnets for price and create sharp reactions. If you are a day trader, focus on the 1-hour and 4-hour reactions around these zones. If you are a swing trader, give more weight to the daily closes. And if you are new, start with higher time frames. They filter out noise and give clearer signals. Remember, trading is not about predicting the future. It's about reacting to what price is doing at important areas. Support and resistance are like battle zones between buyers and sellers. Your job is to wait, observe, and join the winning side once the market shows its hand. At Forex Trading Rocket Signal, our goal is to simplify this process for you. We analyze structure, key zones, and momentum, so you can focus on disciplined execution. But even the best analysis only works if you follow proper risk management and control your emotions. As we move into the next trading sessions, volatility in gold is likely to remain high, especially with ongoing economic data and central bank commentary. Be patient during consolidation, be decisive during confirmed breakouts, and always respect your stop loss. If you found this breakdown helpful, let me know in the comments what your bias on gold is right now. Bullish or bearish? I read your comments and they help shape future analysis. Also, share this video with another trader who needs clearer gold levels today. And if you haven't already, make sure you resubscribe to Forex Trading Rocket Signal so you stay ahead of the next big move. Gold rewards patience, discipline, and preparation. The levels are there, the opportunities are there. The only question is, will you be ready when price reaches them? Stay focused, trade smart, and I'll see you in the next update.